Welcome everyone to Vested Interest. This is Shane back again for the stock pick of the day video. Today we are going to take a look at one out of the material sector. We're going to take a look at VALE. This is a mining company. They don't just do mining though. We'll see that here in a minute. It is August 31st, last day of August, quickly heading into September. So this year is really flying by. Hopefully you've done well. Let's jump in and take a look at this one. So if you want to know more about this company, check them out. VALE.com. That's VALE.com. That is their homepage where I pulled this information from. We were founded on June 1st, 1942 as Compañía Valle do Rio. I'm probably butchering this, so apologize for those of you who speak Spanish. Compañía Valle do Rio Doce. Over the years, we became just Valle and built a history. We pioneered the world as a global mining company. We are present in more than 20 countries, sharing the passion for our business. We face challenges and we continue to learn every day. And as I said, they are not only a mining company. We have advanced ever since the first ore extracted in Etabira, Minas Gerais. Since then, we started to work in logistics through our railroads, ports and terminals, and energy and in steelmaking. So obviously they are a mining company. Their main product is iron ore. They take that iron ore and make steel out of it. They incorporated the company back in 2008, a joint venture with Dongkook Steel Mill Company and Pasco, two major South Korean steel producers. So if you're getting any projects completed out of South Korea, it's probably going to be steel produced or at least supplied from Vale. They also create their own energy. About 54% of the energy consumption of our corporation or operation is supplied by our own generation, with emphasis on hydroelectric and wind sources. So it's not only generating electric, but they are renewable resources that they're using to produce that electric. And again, in the logistics sector, we created a logistics network that is part of mines, railroads, ships, and ports, ensuring agility and efficiency during transportation. In addition to our products, we carry cargo to third parties and offer 2 passenger train lines in Brazil. So they have their hands in a lot of different aspects of the business segment and are rather integrated on their own. And some of the places they are located: Brazil, Canada, China, Indonesia, Japan, Malaysia, Oman, and the United Kingdom. So they are spread out around the world. They have their hands in quite a few different industries. I like the diversity of this company, and I like the mining aspect of it. They don't just produce iron ore, but it is their main segment. Nickel is another one, and that is a sneaky play on the future of EVs. As a matter of fact, this company here has a deal with Tesla to provide a lot of the nickel, if not all the nickel, for their EV batteries. Now, the reason we are looking at them, down 1.28% on the day. We are talking about Vale, ticker VALE, out of the materials sector. They closed the day at $13.16. 52-week range as low as $11.72, as high as $19.31. Definitely closer to their 52-week low here. And I love this company. Anytime it dips under 13 into the $12 range, that's where I started picking them up almost 2 years ago now. My cost basis is a little higher than this currently. We'll see that here in a little bit. Average volume 21.3 million. Today's was 14.4. Pretty much a sell-off throughout the day. Market cap of 56.808 billion, a beta of 0.81, so they are less volatile than the overall market. Price to earnings PE ratio very low, $5.42 per share. Earnings per share EPS $2.43 per share. They do not have a earnings date listed. Forward dividend is 69 cents. Their current yield is 5.21%. Nice yield on this one, though you will see here in a little bit their dividends are sporadic. So it looks like the next one's going to be around 69 cents, but that is not, they're typically a semi-annual payer, so they pay out a couple times a year, but it's not always the same, and that'll make it hard for us to do the dividend yield theory here in a minute. You'll see that also. Ex-dividend date, March 14th. Looks like they're going to pay out September 11th. So coming up here in less than 2 weeks. And a 1-year target estimate, at least according to Yahoo Finance, is $16.46. So they do see some upside appreciation in the stock price on this one. Now, I like to typically look at dividend yield theory. To do that, you'd go under statistics, look under dividends and splits. You'd look at their 5-year average. They do not have one listed. We're going to see why here in a little bit. Again, their dividend is not steady. So it makes it hard to have a 5-year average if you have it fluctuate like this company does. And that is one of the downsides to this company. When they're doing well, their dividends are going to be very, very good, and they are cyclical company in nature. And when they are not, when metal prices are down, you might get a little lax dividend on this one. So you'd have to be aware of that going into this. But their current dividend yield is very nice at 5.21%. They do have a low payout ratio, 44.84%. Now, I like to look under the financials. You're going to find a lot of good information here: debt to equity ratios, their income, their balance sheet, their income statement, a lot of good information. You want to look under that. We want to look at their free cash flow, see if it's growing over time. Dividends are paid out of free cash flow, so that is the reason. 2019, $8.4 billion. 2020, big jump up to $9.8 billion. 2021 was really the bigger jump to $20.6 billion. Huge jump up here. Metal prices really shot up. That's part of it. Part of the reason there. Metal prices have come back down. That's part of the reason for the drop from 2021 to 2022 back to $6 billion. So overall, it looks like from 2019 to 2022, decrease in free cash flow. But I want to point you to above again, repurchase of capital stock. 2019, they were at $8.4 billion, but they didn't repurchase any shares of their own stock. $9 billion in 2020, no repurchase there. 2021, they had a huge jump up again. Metal prices really shot up, and they bought back $5.5 billion of their own shares. And then another big purchase in 2022, over $6 billion of their own shares. So even though free cash flow has dropped, if you added this $6 billion in free cash flow, a little over $6 billion, to the $6 billion in repurchase of their own shares, they would have growing free cash flow from 2019 to 2022. So I'm going to call it growing free cash flow over time, because I like it when companies are buying back their own shares. And if they are using their free cash flow to pay down debt, to buy back their own shares, to reinvest in the company, do acquisitions, I don't mind them using their free cash flow to do that. It helps me out in the long run as an investor and makes the business more profitable. In this case, when they're buying back more shares, it gives me more ownership even if I don't buy any more shares of the company. Let's keep going here. Now, I always recommend more than one source. So another one that I like is stockanalysis.com, and they have 7 stock analysts that have taken a look at this. They call it a consensus buy. It is close to the hold. This would be a hold. This would be a sell, strong sell. This would be a buy, strong buy. If you were to go to stockanalysis.com, you could click on each one of these and see how many of the 7 are calling it a hold, how many are calling it a buy, how many might be calling it a strong buy, how many might be calling it a sell or a strong sell. So that's one of the things you can't really see here, but if you were to go to the website, you could. Now, they have a low estimate of $15. That would be a 13.98% increase from where it currently sits. It currently sits lower than their lowest estimate. They have an average estimate of $17.50. That would be a 32.98% increase in the stock price. And if it happened to hit their high of $20, that would be a 51.98% increase in the stock price. And you could collect that 5+% dividend yield along the way. Now, I like to look at statistics. You're going to find a lot of the same information. They go back a little bit further on stockanalysis.com than Yahoo Finance. That's part of the reason I like them. Plus, they present the information in a nice, usable format here, like this forecast and some other information. But under statistics, I like to look at the financial efficiency of the company. To do that, you're going to look at return on equity, ROE, and return on invested capital. And I like 10% or better for both of these numbers, or in line with their industrial average. And their return on equity is screaming, 53.4%. And same with their return on invested capital, 31.10%. Very, very high numbers here. Very nice to see. Very efficient with their own funds reinvesting back into the company here. Now, another negative here, their EPS growth forecast is not shown, neither is their revenue growth forecast. I usually like 5% or better on EPS growth forecast. Unfortunately, it is not one we can look at here, possibly because it is a foreign company. Maybe they don't share that. I think you could find this elsewhere if you did some digging. But unfortunately for this one, I did not see it under Yahoo Finance, and I did not see it in stockanalysis.com. So maybe if anyone knows, has another source that they use for this type of information, let me know what the EPS growth forecast is down below. I'd really be interested to know that. I will do some digging to see it for myself, but if anyone has another source they use, let me know. Now, dividends payout. So this says 19.96%. The other site there, Yahoo Finance, showed 40%. I'm going to just say it's under 50%. Very low payout ratio. You'll also see the dividend growth is in the negative. Before we go through the dividends here, I am long VALE. I do have 230.314 shares. I am down slightly, 3.7%. My cost basis is $13.71. So I like this, that it's lower than my cost basis. This presents a buying opportunity for me to bring down my cost basis, bring up my future potential return on this one. I will be probably looking to add to this one maybe tomorrow even. I would love for it to dip down a little bit more back into the $12 range, but anytime it's under my cost basis, I'm looking to add to this one here. Now, I want to walk through the dividends. Went back to 2017. This is what I was saying. They are not consistent. Excuse me. They are not consistent with their payouts. Sometimes they pay once a year. Sometimes they pay 2 times a year. Sometimes they pay quarterly. I count on 2 payments a year, even though they don't always do that. 2017, they were paying about 12 cents. 2018, 14 cents. 2018 again, you'll see there's where they did 2 payouts in that year, 39 cents. 2019, they only paid out the once at 34 cents. 2020 only once at 45 cents. 2021 they paid out 3 times, 76 cents. In March, June they paid out 43 cents. In September of 2021 they paid out $1.55. Very big payout this year. That was that year that you saw they had a big jump up. So again, when they have good years, they are rewarding shareholders with more dividends. That's part of the reason I like them, plus the potential future growth, and I believe they are a sneaky play in the EV market. 2022, they paid out 3 times again, 72 cents, 68 cents, and just a small payout here, 5 cents in December, but they did pay out 3 times last year. And then this year, they are going to pay out, looks like at least twice, 34 cents they paid out in March. This one here, August 14th. So their actually last dividend, ex-dividend date was August 14th, even though Yahoo Finance showed us that it was back in March. But again, August 14th, so we're past that one. So you would not be in line for the next dividend if you bought them now, even though this one's showing up on mine. That's what that D stands for, dividend. They're about to pay out that dividend on September 11th, and it's going to be, I think they showed 69 cents, so they're counting that March dividend. It's going to be 40 cents and some fractions of a penny. So this is one that I like. Let me know what you think down below. Are there mining companies in your portfolio? Do you avoid them? I know some people like the steady Eddie dividends payouts. I don't mind the cyclicality of this business. My uncle's a miner, so I understand the cyclicality of metals and that sort of thing. They go up and down with the economy or with need in general. So I don't mind that, and I like the company overall. I like that they are diversified in multiple sectors of business as well. This is the Vested Interest Stock Screener. This is how I set up the videos. You can run through this at your leisure. And that is it. That is VALE. Let me know what you think down in the comment section below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join us here on the Vested Interest community, building a community of like-minded dividend growth investors who share our experiences, stocks like this, stocks we may be avoiding, tips and tricks we've learned along the way. We cannot benefit from each other's investing, but we can benefit from each other's experiences, good or bad. I don't mind sharing whenever I've made mistakes. It hopefully will prevent someone else from making the same mistake. Hopefully you feel the same way. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.